Thanks for joining today's episode of Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. My name is Michele Enriquez, your host here at Patelco Credit Union, and greetings, everyone. Welcome back to the show, and thanks for tuning in. Today, we're going to talk about all the things you should consider when choosing a credit card, and our conversation today is not going to be useful for just people getting started with the first-time credit card, but hoping to ignite some thoughts for people out there that might be looking to maybe re-diversify their credit card mix or get an additional card as well. We have two friends with us to talk it through. We're joined by the Andrew Farrell, Community Engagement Specialist, and first-time guest Alexia Razo-Orrego, who is the Assistant Branch Manager of our Dublin branch. Alexia, welcome to the secret studio that's been in this building the whole time.
Thank you for having me. I'm very excited to participate and be able to share some of my knowledge. I am fortunate to have come on board with Patelco about a year and a half ago, and I have about 15 plus years of experience in the financial industry, and I'm really happy to be here and be able to share some of my experiences and what I do here.
Yeah, and our branch is here at the building, so I didn't know if you knew the podcast studio was right behind the branch, but welcome.
Thank you.
All right, Andrew, it's always a pleasure to have you here. Welcome back.
Thank you. It's always a pleasure to be. It's my fifth time here, Michele.
Fifth time? We're counting?
We're counting.
Awesome.
We're counting.
Awesome. So I'll kick us off, you guys. I have an embarrassing story to tell. The moment we figured out the topic for this episode, I immediately recalled a scenario with a past intern who spent the summer with us. And he had asked me for some time to help talk him through getting his first credit card. So I scheduled a meeting with him and then proceeded to completely overwhelm him with every credit consideration he could possibly have. Bobby, if you're out there, I'm so sorry I overwhelmed you that day. I hope that credit card that you eventually applied for is working out for you. You know, I feel like there's some things in life that we don't have to be the full experts on. Give me the high level basics and then let me consult an expert and somebody just tell me what to do, right? If you're the expert on it, I'll take your best recommendation, but I don't want to be the expert on credit and all the credit card options.
I hear you.
So hopefully this episode is, an attempt to redo that and to help simplify it, which really is the point of the whole show, isn't it? Why don't we start off with, because we're talking about getting started with your first credit card, maybe going back and looking at getting a different credit card, but level set. Andrew, what's the age that you legally can get a credit card?
Yeah, so the legal age to begin applying for credit and building your credit score is 18. And I do suggest starting with establishing credit as early as possible. Keyword, as long as you're able to do it responsibly. That means no, maxing out credit cards, no missing payments. But if you're able to, responsibly handle credit at 18, that is a good time to get started. Once you turn 18, getting started with your first credit card, it can have lots of good benefits for your credit growth long term. It helps accelerate your credit growth as you'll maximize the amount of time that you'll have established credit, and that'll help boost your score quite a bit. If you are looking for advice on how to get started when the time is right, look no further than Patelco Credit Union. Any one of our 37 branches or our virtual branch are fully equipped with super knowledgeable team members, Alexia being one of them. Very, very happy to have you here to get your insight as well. But all these people can get you on the right path to successful, healthy credit growth. This can be both establishing your first time credit and starting to build credit, or rebuilding credit as well. We have lots of financial guidance that you can request with one of our certified financial specialists. You can make an appointment on our website under the financial wellness tab, and they can get into all the nitty gritty with you as well. So, lots of ways to start establishing credit, to build new credit, and to do it responsibly with, the trusted experts that we have here at Patelco.
Awesome. So 18 is the age that you can get started. Alexia, I went with the manager from your branch out to a junior high school class yesterday. We taught 7 classes, introduced them to the concept of credit. And the main point we wanted to leave them with is like, hey, credit's going to be important to you in the future. You're probably going to want to buy a car. You're probably going to want to buy a house. But understand that credit has more implications than just your ability to borrow in the future. It has implications for future employment. Your credit report is something that a future employer is probably going to look at. When you go to rent your first apartment, your future landlord might get your credit report to make assumptions about you. So there were a lot more things that we were trying to leave these young people with in anticipation of 18 and getting started with credit. So the timing was just really good, and it happened to be your manager that was with us in the classroom. But the thing, or the direction that we were pointing these young people to, was to the branch. When you're ready to kind of make these big decisions, it might be good to go in and talk to somebody. So if you get a bunch of kids at your branch asking for you, then you understand the reason why. But you help young people and just members alike with this very need all the time at the branch. Tell us a little bit about kind of that needs assessment, or the questions that you ask when people come to you and say, well, I haven't got started with credit, whether or not they're 18 or not. How do I do that? How do you go about kind of uncovering what their needs are to put them in the best match?
Absolutely. So at Patelco, like you were mentioning, every experience is different. Every engagement and conversation that's had is different. It's really tailored to what the individual needs are. Some great questions that I would follow up with when I'm actually conversating with somebody is, what are your short-term goals? What are you trying to accomplish within the next year? What are you trying to accomplish within the next 5 years, 10 years, and so on and so forth? Really giving them the opportunity to see what their needs are, because when I'm evaluating a situation, I want to make sure that we can meet their financial goal. So I feel like that's a very important conversation. The goals, if they're trying to accomplish something, what's the time frame, and a realistic time frame on what we could do. I also think that it's important to have the conversation of affordability of what you can, for credit needs, what you can get. So that's something that I would also want to conversate, if there's employment, is there future employment that's going to be had? But like I said, every conversation is tailored to that individual's needs. So different conversations for a retiree versus somebody who's brand new into credit, or maybe somebody that needs debt repair, and how we can help provide them solutions to those.
And in talking with these young people too, afterward, the hands fly up, they're asking questions. The topic of credit usually always stimulates a lot of questions because it's complex, it's convoluted sometimes. One of the things that came up was the fact that they didn't want to wait till they're 18. They understand that they could possibly be on a credit card with their parents before 18. Can you talk a little bit about authorized users and kind of the difference of being an authorized user versus being an actual applicant or...
Absolutely. So to be an authorized user, you'd have to be 16 years of age or older to become an authorized user. It would have to be authorized by the primary credit holder to actually allow that individual to basically use the card. The individual who's the primary credit applicant, they would actually be responsible for those transactions that are made by the authorized user. This could benefit somebody, maybe if you're trying to teach somebody how to use a credit card, maybe also optimizing good purchases versus bad purchases, but also it could help maybe if you have a retiree who becomes ill and they need an authorized user to maybe aid them to get groceries, or to help them with their simple tasks that maybe they are incapable of doing at that immediate moment. I would say there's advantages like assisting or to teach, but I think it's a huge responsibility for that primary applicant, because any transactions that are posted on that card is ultimately the responsibility of the primary user, and it's affecting their credit, whether it be in a positive or in an adverse way. So if there is adverse usage, that's a consideration that a primary would want to consider before saying, let's have an authorized user. You really want to have that conversation about responsibility when utilizing that card, because it will ultimately reflect on the primary's credit report. So the authorized user doesn't get the benefit of reporting purposes for that credit card. So if there are on-time payments, anything like that, it's not showing on the authorized user's side of the credit aspect for building credit. So it might be an opportunity to just have more of a teaching tool versus something that is going to ultimately help this individual build their credit.
Yeah, and at the end of it, we were encouraging these young people to have the conversations with their parent or an adult. If it makes sense to go the authorized user route in anticipation of you having your own at 18, kind of depends on their level of responsibility, but maybe also their parents' comfortability with even having them on, but an option nonetheless. Okay, cool. So let's switch gears a little bit because yesterday we also talked with these folks. Actually, when we're in the college classroom, Andrew, this comes up a lot. When we talk about the spectrum of the credit score and the factors that go into what makes your credit score, credit mix always comes up. And I feel like it's the most confusing for everybody to grasp. So you're the best at kind of breaking it all down. So when it comes to credit mix and the healthy credit mix, there's some rules that we teach in the classroom. I'd love for you to share them on this show.
Yeah, so I want to talk about when they're calculating your credit score, they take into consideration 5 different factors. So just to make sure everybody is kind of on the same page with this, I want to talk a little bit about what makes a credit score just to begin with. There's payment history, which takes into account whether you've made at least your minimum payments in full and consistently and on time. Amounts owed looks at the total amount that you currently owe across all accounts relative to the credit that you have available. Length of credit history basically means that the longer your credit accounts have been open and in good standing, the better. That is a very good reason why you should not ever close your first time credit card, because once you close that, if you've had it for, 10 years, 15 years, even if you're not using it, if you close it, you lose all that positive payment history. New credit, this is where hard credit pulls come into play. So this is kind of the way the lenders look at this is if someone is applying for a lot of new credit frequently, that can be a red flag because it can sometimes be indicative of like a financial pressure or like overspending habits or things like that. So every time you apply for credit, your score does get dinged a little bit. The last category, the one that you mentioned, is credit mix. So this means that lenders like to see that you can successfully manage a healthy mix of different types of credit. So this means like revolving credit, which would be credit cards, lines of credit, things that you kind of borrow and pay back, as well as installment credit. So these are things that you make your set payments on: home loans, auto loans, student loans, that kind of stuff. So those are all the different factors that we use to calculate credit. When we're looking at having the right balance of credit lines, first and foremost, a question that I get all the time when I'm out in colleges is how many credit cards should I have?
What's the sweet spot?
It's a sweet spot. And it's such a tricky question to answer because, we just talked about all the factors. Number of credit cards is not on there. So there's no real black or white answer for how many you should have. My general, frame of thinking there is just don't have any cards that are unnecessary. The more cards that you have, that means the more cards that you have to manage, which could ultimately result in like missed payments or missed annual fees or things like that. It can also mean a lot of hard pulls on your credit, which can bring your score down. Brand new credit cards also affect your overall average length of credit history since it brings down your overall average credit age. So basically just apply responsibly and conservatively. For the credit cards that you do have, the general rule is 30% usage. That's kind of the rule of thumb for the amounts owed that you had. So I mentioned earlier, one of the factors in calculating a credit score is amounts owed. The rule of thumb there, for good shape, 30% or less. So that means that, let's say you have 3 credit cards. One has a $10,000 credit limit, one has $4,000, and one has $6,000. Your total available credit between all those cards is going to be $20,000. That is your available credit. You want to keep your balances on all those cumulatively at 30% of that available or less. So in that case, it'd be about $6,000. That is a green flag to lenders because it makes you look on paper like a very, responsible borrower, and it can help boost your credit score in the long term as well.
Yeah. And you used to work at the branch like Alexia did, right? Most people don't know that. That's not in all of the large spectrum of things you need to know about credit and how your credit score is calculated. That's never the most obvious, but also the most kind of counterintuitive for students and young people to grasp.
Well, it's weird because I think a lot of people think I make my minimum payment on time. I've never missed a payment. Why is my credit score not 800? And it's if you make all your payments on time, that factor of your credit score, the, on-time payments, that'll be, good and gravy. But if your, balances are all maxed out, well, that section's going to be okay. That one's not going to look so good, which can, have a negative impact on your overall credit.
Okay. So 30% utilization of your credit card. Rule of 3, so a good healthy mix. Alexia, you're on that same page too?
Oh, absolutely.
As someone who processes loans, you're looking for a healthy mix, and that mix is probably
Correct.
3? Okay. We were trying to get the students yesterday in the classroom to get to thinking of things from the standpoint of somebody that would lend money. So when you go and see somebody like Alexia and you're asking her to borrow $10,000 or $20,000, what are going to be the things that she's looking at to make a determination about you and your character as a person to want to lend money to you. And we were comparing that to their report card, their grade history in their report cards, and the maximum GPA you can get is a 4.0. Kind of think of your credit score like, okay, the max is 850, but think about your credit report in the same way you might think about your grades and your GPA. Okay, cool. So now we have a better idea of when to get started, when we might need to add a credit card if we're talking about credit mix. And I feel like that comes up a lot too when we have folks that come to us and say, you know, I'm interested in buying a home. I want my credit score to be in the best optimum position. I might need to add another line of credit in order to do that. That's something that they can come to you and ask advice on, Alexia?
Absolutely. So definitely if you're interested in purchasing a home, anything like that, you do want to have a good credit score. You also, like Andrew had mentioned, a mix of installment versus revolving, and making sure, like you had also suggested, making on-time payments, but making sure you're also at that 30% or less length of time history. That's all very important, but that's something that can be evaluated for what you specifically need as a member, what you're looking for, and then your time frame of trying to accomplish that also, and how we can get to you to that point where you have your odds are going to improve to get that loan that you're requesting.
Okay, cool. Are we entering overwhelming Bobby territory?
I think Bobby's fine.
Okay.
I think Bobby's doing well.
Bobby, again, we hope you're out there. I'm hoping we're not overwhelming our listeners too with all of the information that you should have, but it's all important.
Yeah.
It's, if you're going for that 850 credit score, if you're trying to meet all of those financial goals, your credit score and your credit report is such a big part of that. Okay, so we know when we need to add a card, get started, all of that. Let's talk about all the options that exist out there in the universe. Okay,
I'm
Andrew,
excited.
let me just ask, this wasn't part of our outline. Should you just go open a credit card at every retailer that asks you at the counter? Is that a good strategy?
No, it is not. So beware of retail credit cards. I'll say lots of times when you're checking out at any department store, they will try to sell you their card to get you to save. Yeah, right there. And it's always a pretty good deal. Your purchase is $300. If you open up our card, it's only going to be $80 today. Let's go and do it. It sounds so good. It always sounds so simple. Save here and you'll save all this money today. When you are given those offers, just make sure you're thinking it through as a long-term decision, because really getting any credit card is, in fact, a long-term decision and not just a way to save some quick cash. Same goes with those mailers inviting you to apply for credit cards. A lot of those times you're probably going to be subject to a credit pull. Some are pre-approved where it's not an actual credit pull, but a lot of times, how do I say this gently? Just because something implies that you're pre-approved does not mean that you actually are pre-approved or that you're not going to have a credit pull. So sometimes verbiage used like you're invited to apply or like you're pre-screened or pre-selected, that doesn't necessarily mean that you are pre-approved. They still could give you a credit pull and that still could negatively impact your credit.
Okay. But I can come ask Alexia if that's the case for me. I know we do a lot of pre-approval letters here at Patelco, but somebody could come to you and say, hey, I got this in the mail, or I got this from you at Patelco or wherever, and they could kind of check the validity of it with you.
Definitely. And also I would suggest when you get those flyers, take it, if you're with us, which you should be, bring it to Patelco, let us look at it. There's oftentimes fine print that's overlooked because they're only sharing the parts that are that institution wants you to actually see, but reading that fine print and actually getting to the nitty-gritty of what is needed. Is it going to be a hard pull? Is it, because it should be disclosing that in that fine print, but like Michele mentioned, we do offer pre-approvals here at Patelco too, and they do occur, and we generally will try to have that conversation with our members as they walk through the door, whether it be on the teller side or the banker side. So that is something that conversations that can be had, but also if you kind of just need the consult of, I got this in the mail, what can we do in terms of our interest rates and our annual percentage rates that we offer? They tend to be a lot lower than these larger retail institutions. So it's a great opportunity to kind of compare, is there fees associated, or do we have fees? And just getting your options. I don't think you should just pick the one that came in the mail that says you're going to have all these swanky things, but there's probably strings attached. So it's really important, I think, to consult somebody who you can trust. And that's how we really like to see ourselves here at Patelco, somebody that you can come to and really get that advice. Is this a good option? Maybe we have something that we could provide that's better, a stronger or a better fit for that individual.
Yeah, that's good advice. Andrew gives a great budgeting class, and one of the things you recommend in that class is taking a step back. You get the information, you sit on it and you think about it, you consult an expert, and then you can make a decision. So it's not no forever, it's a no for now.
No for now,
It's
exactly.
a no for now. Okay, regarding rewards and options, right? We got all the retailers that are offering you credit cards. You get all the things in the mail. There's a lot of things out there. I think a lot of what might be top of mind for people when considering a credit card or an extra credit card might be what's in it for them. And credit card companies, frankly, they're fighting for everyone's business. So it's in their best interest to offer these perks. Andrew, you are self-admittedly a sampler,
Yes.
right? For the sake of like being knowledgeable, but also for your own financial health. You want to have the best thing that's out there.
Yeah, and I love free stuff.
Yeah, I love free
doesn't,
stuff
right?
too. What is your priority when it comes to rewards? There's cash back, there's miles, there's all kind of things.
So I think it just kind of depends on like finding a card that offers rewards that best aligns with your lifestyle. For me, I really like a travel reward. And I will say this about rewards. So generally, the way credit cards work, you swipe your card, you spend the dollar, you get the points associated with those dollars spent as soon as you spend them. But you are not actually paying any interest on those dollars spent unless the balance carries over into the next statement cycle.
Right.
So, I mean, theoretically, you can be like the way I do it, I put all my purchases on my credit cards, I rack up all the rewards, but I pay my balance off constantly. So I'm never paying any interest and I'm just getting free money out the wazoo. It's fantastic. I have a travel credit card that actually does have a small annual fee. So one thing to consider when you are looking for a credit card is annual fees. There could be some that offer really good rewards, really good points, but the annual fee. If you want to avoid annual fees, there are plenty of options out there that you can do that. Patelco has a really great points rewards card that is totally free for the annual fee. You get lots of points back for gas and groceries and all kinds of good stuff. I do not think that annual fees are necessarily the worst thing in the world. Not everyone agrees with me on that.
I agree with you on that.
Yeah. So when I was looking for my travel card, I compared 10 different ones. And the one that I picked ultimately does have a small annual fee. It's less than $100 a year. But the rate that I get points back on this card more than pays for the annual fee. When I compared that, even factoring in that small fee, I still net more rewards than I would have on some of the free ones. So I decided ultimately that was the way to go. But I know that because I did my research. Yeah. I, looked around. I didn't just take the first card that came my way. I made sure that I made a good, strategic decision. Credit cards, it's a lot like going to an all-you-can-eat buffet. You've been to an all-you-can-eat buffet. You don't just stock up on bread right away. You gotta survey the surroundings. Right. You go for the prime rib once you've staked it all out. And that's the same thing with credit cards. It's a game, and you gotta play to win.
Yeah, but you gotta do your research too. Again, Alexia and the branch is a great resource to do that with. Bring all your options, sit down and talk about it. We've got a service called Certified Financial Specialists where you can come down. You don't fully understand, or even if you fully understand, you might just need an expert to kind of bounce ideas off of. That is literally the purpose of that position here at Patelco, is for you to get personalized financial advice regarding budgeting, making decisions about credit, et cetera, et cetera. So come see Alexia at the branch if you want to do that. Andrew, I love that. For me, it's miles. Mm-hmm. Miles is my priority. And funny because my mileage card has an annual fee, and I agree with you. What I gain on the mileage outweighs what I pay in the annual fee, so I'm willing to pay the fee. But different strokes for different folks,
Sure.
right? It could be cash back, it could be...
Another cool thing with rewards that a lot of cards will offer different rewards for different categories. So let's say you have maybe 2 or 3 credit cards. One might offer you, 5 times cash back on groceries and dining out. Another might offer you more rewards on entertainment, for example. So just if you're looking to redeem rewards, which I think is a very smart thing to do for credit, you really can kind of bend the system to your will and make it so that you are getting all kinds of free stuff. Just make sure you're being as strategic, doing your research, using specific cards for specific purposes that are going to get you the most bang for your buck, and you'll be golden.
Yeah, and Patelco is a great place to do that, right, Alexia? Because we've got both cards with rewards and no annual fees, so kind of a double whammy. The cool thing about our website, too, where you can find information about our credit cards is that you can do side-by-side comparisons on the webpage, too. So patelco.org if you're interested in comparing our credit cards. But regarding rewards, so and me and Andrew's kind of preference, do you have a preference when it comes to rewards and how you use your credit cards?
I like to be low cost. So I'm one of those people. I do have a rewards card, and similarly to both of you, I do pay an annual fee, but it is under $100, and I do use my points and I do redeem them. So I agree it has to be a low cost annual fee, and I have to be able to reap the rewards. Just to piggyback off what Andrew said, a rewards card is not go wild and do everything that you want. I strongly agree with him saying that if you're able to pay that balance off, it's kind of like free money almost, because you're paying your monthly balance off, so you're not getting the interest, but you're reaping the rewards of getting points that you can maybe apply to your balance, or that you could use for your mileage, or to go shopping if you want to go to Sephora, or whatever makes you happy.
Sephora.
Yeah, so I totally agree with under 100, I would say that's kind of a good route, and just have that mindset that if you're going to be making the purchase, it might be in your best interest to be able to pay the balance off fully, so you can kind of get that free money and think of it like these points are like free money for me to use on maybe those special things that you want to do versus throwing them on the credit card each time.
Maybe not even special, just I want to spend just for my own mental health sometimes too. Okay, what are we not talking about? What other than rewards or anything else should we be considering?
I honestly think that there's a lot of people that might have had, I'm going to throw my own experience in there, adverse experience as a first-time credit individual. When I was fresh out of high school, I did get a credit card, and it was with a major retailer. And the first thing I would note is that they gave me this limit, which might seem small to some, but $5,000 that I could use immediately. And I am mature now, and I can see Patelco, we have a totally different frame thought when we come into the actual lending side. We're here to not give you a further financial struggle. And when I'm dealing with youth coming into the lending side and getting a credit card, generally we are very conservative on what we offer that individual. If you have a job and you're coming in at 18, it might be approved for $1,000. And that's something to, I know some people might seem like, oh, that's small, but when you think about it, the 30% usage, it's really a good opportunity to teach somebody. Versus the $5,000, for me, I was in debt for many years after that, paying it back. So having that, and then looking at the retailers, the major retailers, and their annual percentage rate in comparison to what we do, we're very thoughtful when we actually do our underwriting and we're looking at everything. We are going to see, can this person afford to pay it back? We don't want you to have a lifetime struggle that you're going to be paying for years and years and years. So for us, I would say we're completely very mindful of that individual, what their needs are. So I think that's something that I would just really throw in there. It's more about the financial education and that being a responsible shopper, being a responsible credit user. And that's what we can give to our Patelco members, and jumping on board with us is kind of that education along with that credit that you're needing, or that loan that you're trying to get.
Yeah, that's great. So putting you into something that's commensurate with your lifestyle, something that's comfortable for your ability to repay. I mentioned I was in the classroom yesterday with these kids, and yes, they did say, well, getting started with a $100 credit card, what can I do with that? Or a $1,000 credit card. I had to tell them the story. These poor kids, we saw about 70 kids yesterday, and I started off every class by telling them, hey, back in the day when I went to school, back in the 1900s when I got my first credit card, there weren't any rules around income or forms of repayment. So I got started with a $30,000 credit limit when I was 18 years old.
That's insane.
And guess how much of that credit card I spent? It was all of it. plus whatever student debt I had, plus whatever other debt I had. So at 22, I was in a big hole to start. But that kind of set up the rest of the class and got everybody's attention to say, okay, I need to pay attention to this, but also kind of reinforce the importance of starting small and the importance of making sure that we're putting young people, especially in a position where they're able to repay this and use it responsibly.
And what 18-year-old, like, you give them $30,000 and no education, of course they're going to spend it all. I would do the same thing.
Yeah. On top of that, too, would you say our rates are responsible also?
Absolutely. I've actually done side-by-side comparison on major retail financial institutions, and it is different, I would say. There's obviously an application process and a credit that we will check, but just in comparison, it is distinguishedly much lower coming to Patelco. Or bring your statement in, let us show you, and then kind of apples to apples what we can do versus what your statement is doing. Also, just to kind of touch back on a lot of statements when you're looking at them, just to go back on the 30,000 limit, if you're paying the minimum, it usually tells you how long you will pay if you pay the minimum.
That's a requirement.
Take a look at the amount of years you will be paying.
It's just the infinity symbol.
Oh gosh, it's crazy because that's something that you don't like. Maybe if you're just like, oh, I'm making, like you said, the minimum payment, I'm doing the right thing, I'm making the minimum. Look at how long it's going to take you to pay that back. And then when you come to an institution that's actually going to give you a responsible credit limit, you will see the difference, and it's going to make that difference in your life, and it will ultimately help you. I find many success stories from members just saying how much we've helped them. But like I said, apples to apples comparison, if that's what you need to visually see it, bring your statement in, and then let's see what we can do for you. And absolutely, you're going to see a difference in the annual percentage rates that are offered at Patelco.
Okay, awesome. So listeners out there, you don't have to have all the answers at the end of this episode. Andrew, can you help everyone understand the how? So I think I know what kind of rewards I want, and I need to pay attention to the interest rate, and I should probably go see Alexia. How do I get started? Just sign up with the person at the counter at the retailer? Not that.
No, you've learned nothing, Michelle. Not that. No. I would say, first of all, if you're looking for a new credit card, first and foremost, ask yourself why. And if the reason is because I want to pay for something I can't afford, then that's perhaps a good time to reconsider if that is an actual, wise financial investment for you. If it is something that you really need, you want to, improve your credit mix, you want to improve your available credit, whatever the reason may be, you get some more rewards. First step, obviously do your research, compare and contrast, like Alexia said, apples to apples, look at the different cards that are out there and find one that's going to be the most advantageous. Talk to your, trusted financial contact, whether that be your financial institution, or maybe you have a friend or family member who's just really financially savvy. Run it by them, make sure everything looks good. And then when it's time to apply, I would say the best course of action is to just actually sit down with somebody. At Patelco, like I said, we have the 37 branches. We also have our virtual branch, so lots of ways that you can be face-to-face with someone. They can answer any last-minute questions you have, and then make sure the application is done in a, thoughtful and responsible way.
Okay, now I'm thinking back on it. Maybe I didn't totally overwhelm Bobby. I feel like all of this information was super necessary and pertinent. I feel we could go on for another couple hours on this, right? So maybe it wasn't so bad. I'll have to contact Bobby.
I think
share
Bobby
this.
was grateful.
Yeah,
Yeah.
I think he was. Okay, so what's the best first place to point folks to? We got a lot of information on patelco.org. If they want to do that side-by-side comparison of our credit cards, they can do that there. They can also come in and talk with Alexia at our Dublin branch, but we also mentioned these certified financial specialists that you can come down in addition to everyone else at the branch that can help. You can apply online. If you feel like you're ready, you can put your application in online. What else are we missing?
I think that about covers it.
Right. Come see us, come talk to us, apply online, and let us help along the way. Alexia, it was really great to have you in the studio. Thanks for sharing your expertise with us today.
Thank you for having me. I appreciate you both. It was wonderful. Come see me.
And Andrew, always great to have you. I love taking the tips I hear you share in the classroom and bring into the podcast studio.
Thank you for having me. It was a good time.
All right, everyone, that concludes today's episode of Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. We'll see you next time. Patelco Credit Union is insured by NCUA. Thanks for tuning in, guys. To hear more, subscribe or follow our next video. See you next time.